Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, and I'm here to deep dive into the technical analysis within the charts. We'll cover some stocks, some crypto, some commodities. We'll go over it all today to look at where the top trading setups are for today's trading day and also the rest of the week. All right. So, number one, we came into Friday. Friday, the market sold off on some hard hitting by the president against China, but midday we started to recover. Last day of the month, I would also just caution people that the last day of the month can often be some weird stuff going on there with institutional hedge fund money coming in, trying to get positions that they can show on their monthly statements to their clients. It's kind of like a pseudo window dressing of the quarterly, but on a monthly basis. You then, over the weekend, we saw Trump increasing those tariffs on steel to 50%. The overall sentiment there, really not too big of a deal for the overall markets. Now, futures overnight were down, and we still are down, but we've crept off of the lows. And there's this underlying bid in the market that continues. So a couple key stats. Number one, hedge funds over the last couple weeks have been buying at their fastest pace that we have seen in years. Why? Well, they're trying to play catch up. And that kind of goes to what we saw on Friday. You know, you had every reason on Friday to see the market selling off, but miraculously by midday, we went vertical back to basically the flat line. That's those institutional hedge funds that are like, holy cow, we're caught with our pants down. We got to get in this market. We're late to the party. The retail crowd in this case has been early to the party buying the dip. Now the institutional money, and again, we're not talking BlackRock here. We're talking like lower C grade hedge funds are chasing the markets up here. Now, again, today is the first day of the month. First day of the month, retail generally has new money, whether it's money from their paychecks at the end of the month going into the market, or it's money that automatically goes into 401ks. There's a distribution amount that usually comes in. So it's rare you get a down day on a Monday. But for me, folks, today is very pivotal. If the markets sell off today, even with retail putting new money to work, that would stand out. But generally, you would expect the first trading day of the month, especially with the bull run we've seen recently, should be neutral to positive. Neutral to positive. If it's negative decently, that would stand out to me as a potential signal for the coming days and weeks. All right, let's dive into the charts here. Let's take a look. The futures right now are slightly lower on the day. If we take a look here, you can see that we closed last Friday really right here, right? This was where we closed. So we're down slightly. We're down about 15, 16 points on the S&P. That is not a big move by any stretch, just a minor little sell-off here going into the trading day. And again, like I said, when the markets open, let's see if we get that beginning bid in the markets where the retail money starts to flow in and push the market up, or does it change its tune here? All right, so again, if we flip over to the daily chart, let's take a look here at the daily chart of the ES. You can see we're still stuck underneath this technical range here. So again, on the ES, this is around 59.85 down to about 59.50 to 59.40. You can see right here where we've been up into this level, it was rejected. We came up last week. We tried to punch through. It was rejected again, and now we're hovering just below. So this to me, and I said this last week, this zone right here, which again, you get these little dips here where it got buoyed up. So it was support here, and then it kind of finally came in and it broke down. It's now resistance right in this range. This to me is the determining factor if we see the all-time highs or not, right? So if they can't get us through here, okay, well then obviously we're not going there, and we're probably likely going down pretty quickly. If we can get through here, I would say this week, then you're really talking about a hop, skip, and a jump to right back to those all-time high double top, and likely at least a pierce of the double top. It's very rare markets don't pierce double tops. They usually like to do that because there's a lot of shorts that are in the market that will put their technical stops at a break of the all-time high. So what do we know about markets, right? Markets love, and this is more institutional money and algorithmic money, they love to pierce those highs because it triggers the stops, and the stops then become buy orders, that push it a little bit higher. And they basically get the max amount of bears out of the market, and then the top is in, right? I mean, once you get rid of all the bears, what's the market going to do? Is it going to keep going higher? I guess it could, but in general, you'll see that's the reversion point. That's where we start to turn back down once you trigger those stops of people that had put them right at the high of that market. All right. It's just a psychological kind of point in the markets to kind of keep an eye on. All right. So that's the ES. The dollar today is looking lower. Look at this, guys. So again, we have a trend line right down here on the US dollar. You can see it's connecting right through this low, this low. For the last 2 to 3 weeks, I've been saying this is a bearish pattern, right? The down move, we've had the big down move. We broke this technical level of support, right? So longer term trend line going back to 2021. We connected through this low in September of 2024. We finally came down one more time here, hit it, bounced, and then broke. Okay. Once it broke, what do we know about this? This becomes resistance. And look at how price goes back to what I call the scene of the crime. It's a classic setup. But over the last 3 weeks, I've said to you guys, okay, we've broken this level. So sure, we could retrace the scene of the crime, which is what we did. But where's the ultimate net direction of the dollar? The net direction is down. And it looks like, and again, it's early in the day, but the dollar is trying to break another trend line connecting a short-term low here with a secondary short-term low in this area. And if, again, we break this, we're likely headed down on the US dollar. I would think that we're probably, and again, this would be something to kind of keep an eye on, but we're probably headed down to about 96 and change on the DXY. So again, you're taking a longer term pivot low going back to 2011, connected through this low here in 2021, and it gives us that $96 level. Now, if that continues, let's say the dollar does continue to break down, it's very bullish for obviously gold. And gold is having a good day today as well. We've talked about, and we'll look at the gold chart in a minute, but the gold chart has been consolidating and kind of making what we would refer to as a wedge pattern. And I've guided you guys to say, hey, listen, as long as 3140, 3150 holds, this is bullish consolidation on gold. We'll look in a second to see if gold is on the verge of a breakout or breaking out. All right, back to the charts we go here, the 10-year yield. And again, guys, the dollar and the 10-year yield have taken on new importance for us as investors recently because of what we're seeing globally with the trade wars and how other countries are kind of shying away from the safe haven assets of the treasury market as well as the dollar. 10-year yield today is up a little bit. Nothing to write home about here, though, in all fairness. I don't really have a good signal. I still think we likely have maybe one more move up on the 10-year yield, although I did see some bearish signs over the weekend when I was analyzing this chart that, again, had me questioning that a little bit. But let's continue to just monitor here in the near term. But either way, 10-year yield is up at 4.442% today as we get into June. Couple charts that I'm watching more as a swing basis. Take a look at Palantir. Palantir's down a little bit on the day today after a big late day surge on Friday. But this trend line right here from this high to this high, there might be some good resistance right around 135 on Palantir. I also think it's kind of interesting. This is almost a parallel here. You can see this upsloping trend line with this trend line. It's very close to being a parallel. So again, somewhere up in the 135 range, it looks like a strong resistance point on Palantir stock. All right. So again, something to keep an eye on there. This stock remains basically just around the all-time high right up here, as we can see it trading right in that range. Netflix to me, this is a chart that I wanted to go over with you guys. Take a look at this, guys. All right. So this is your daily chart on Netflix. And a couple things I want to point out here. So if we look at the more recent data here, look at what started to develop. All right. And again, you see I have my RSI. This is the RSI right here. It stands for Relative Strength Index. The only thing you care about on the RSI, folks, is basically if you get negative divergence or not. Listen, I mean, overbought above 70, okay, but it doesn't tell you it's going to reverse, frankly. You have to kind of be more aware. But look at this. High right here, higher high, and higher high here. High, lower high, and lower high right over here. So this is, again, if we look at this in terms of divergences, you can see the RSI is trending down while price is trending up. It's making higher highs. That again is what we refer to in technical analysis as a negative divergence. Okay, negative divergence on the chart. Now, the reason that's important, it tells you that there's usually institutional money that's unloading. That's why you get these negative divergences, okay? So again, to me, that's a signal. Then you incorporate this longer term trend line where you have this high here to this high right here, and look at what we're butting up against right in this range. And to me, that starts to tell me, okay, we're into a technical level of resistance with the negative divergence on the RSI. This has a high probability of being a pullback or sell-off candidate. All right, you guys see how that works right there? So again, keep an eye on the RSI. I only use it for divergence purposes where there's negative or positive divergence, but it is very, very powerful when you do just that. Another chart. Take a look at Booking Holdings, guys. This is one I have not talked about at all, but this is now on my radar. So look at this trend line going back to 2020. And you see this high pivot here right through these highs right there. It connects perfectly through this high. This is now on my short list, meaning that it's not a short now, but it's on my alert list that if we get up to about the $5,700 level up here, maybe just above 5,700, which is not very far away. It's at 5,500, right? So it's a very expensive stock, but 57 and change would be a hit of this trend line. All right. Now, the reason why I'm intrigued by that is number one, that's a very extended move to the upside. But what we've heard, folks, is that the travel bug is now subsiding from consumers, meaning that post-COVID, there was this massive rush to just travel everywhere. But we're hearing from the airlines that there's a big slowdown here. Part of it is the uncertainty. Part of it is these other factors out there, like a slowing economy and consumers feeling inflation. So these combinations, in addition to the numbers showing how few foreign investors are coming into the U.S., that is alarming, but it's a major hit to something like Booking Holdings as well. So again, you have all of these fundamental factors. Okay, so telling us, and the airlines are telling us that there's a slowdown, all of these other fundamental factors, but then you match it up to the technical chart right here, and you say, okay, so this stock keeps going up while we're seeing a slowdown. If it gets up here, we have our technical resistance. This now would become a strong short above 5,700. So for me, again, this is a chart that is on my radar. This could be something that I play with puts as well if it gets up there, as again, it's not super, super volatile, but I think it will get volatile as well. All right. So again, just a good chart there on the Booking Holdings front. Next up, let's take a look at Bitcoin. Bitcoin is selling off. Now, this is interesting. So remember, my one trend line was a little bit above this. This is where art meets science. So the science, what I talk about is trend lines are a science, meaning it's connecting this high to this high to this high. But then you also have to be ready to say, wait a minute, it didn't quite tag my trend line. Was my trend line slightly off, or was the science off? Chances are the science isn't off. It's more my trend line. And this is where the art form comes in. You have to say, okay, well, then the trend line was just right here, right? And ultimately what I did was I connected this high to this high, and we get essentially that high there. So that now becomes our level to beat on the Bitcoin chart. Notice again, last week, this was a fantastic call from last week. I said wide range reversal candle, inside bar bearish pattern, and down it comes. And it sure did come down beautifully late last week into the weekend. And now it's actually starting to make another little bearish pattern. Now, notice where we've come into, right? So if we look at this sideways consolidation right here, if we take a look at this sideways consolidation zone is essentially where we found support. So see all this sideways chop right in here? Well, that's where we're finding support. Now, if this breaks, it opens the door to the next sideways area right down here, where we would start to see our next area of support, which would be around 96,700 down to about 94, right? So that would be your next zone. But right now, this is your level of support on Bitcoin. We'll watch and see if it holds true or not. Over the weekend, I did close out quite a few big winners on the short side in my crypto service, Smart Money Crypto. So that was awesome, folks. We took 3 big gainers off the table. I'm still holding some altcoins on the short side as well, inclusive of Bitcoin, which is slightly in the money here on the short side as well, as I've maneuvered with them kind of right around this high to slowly accumulate the short side. As I do expect, I mean, listen, I don't know how low Bitcoin will go, but again, if I'm right that the market, even if we touch all-time highs, the stock market should peter out up in this range. And then once the stock market comes in, then you start to look at Bitcoin likely coming in. Speaking of which, it is important to note that sometimes Bitcoin can be a leading indicator. And again, you wonder if, the stock market's basically been going sideways, but Bitcoin's been rolling over. Does that tell us a stock market rollover is in the not too distant future? There's anywhere between a 2 to 4 week lag of the stock market historically to Bitcoin coming back. All right, let's look at gold here, guys. How's gold doing today? Gold does look like it's trying to break out. And again, here was your support level right here with the upsloping trend line right there. It's a beautiful level. We tagged it. Remember, I was short gold. We took our money right in this lower level here. And then I've just been kind of watching and patiently waiting and looking to see if we do get the breakout. And that's exactly what we're getting here. So again, it's unconfirmed. So we have to see where it closes today. But with the dollar looking weak, you can't, you got to kind of go on that side that gold will continue to power up, especially considering how much gold is being bought by institutional money as well as central banks. The central bank buying of gold is just insatiable. And that to me, these are the guys that have the keys to the castle, right? They're the ones that have the printing presses. They're the ones with the most information, these central banks. And if all these central banks are just buying gold hand over fist, it's kind of like, well, yeah, why are they doing it when they're the ones that control the printing presses? Okay, they probably know they're going to screw everyone, including the fiat currencies. So we got to have an alternative. Now, I'm talking like 20, 30 years out. It's not like an immediate thing. But, listen, we know that governments almost never cut back on spending unless they're forced to by external economic forces. We're already seeing that with the U.S. government here. The Doge cuts, considering what's going on there, is relatively minor to potentially the spending increases that we would see with the new tax and spend bill. So, it's just politicians, and I've gone on rants about this before, is when you don't have term limits on, a lot of the political players, it's ultimately going to make it so that you're always incentivized to keep things good now by printing money versus, making the hard decisions that is probably the good decision for the overall longer term, even if it causes pain in the near term. All right, let's go on to a couple other charts here, guys. Let's look at silver real quick. I have been bullish on silver, and I told you guys I am long silver, and look at silver. This bullish pattern, we talked about it staying above this, bullish consolidation. Boom, there it goes. All right, so that's a beautiful call from last week as well. Look for short-term resistance around 34.45 to 34.50. And then I do actually think it could break there and actually continue up. This, to me, you wouldn't call it an inverse head and shoulders here, but you could call it, I don't even know. You wouldn't even call it a cup and handle because it's a weird dump there when the April swoon came in on silver and the overall markets. But either way, this bullish pattern, I do think there's a good chance it even breaks through this level. Let's see if it can get up there and test it today or tomorrow. I'll keep you guys updated. Oil's having a good bounce here. Oil, again, OPEC basically held the output levels that they were in. Basically they didn't add additional output. So they kept the output flowing like they increased in the previous month, but the markets are responding positively here. Again, for me, I've really looked at this and said, listen, this isn't so much about, getting prices down because Trump wants prices down. For me, this is OPEC making a calculated decision that they need to keep oil relatively low, like 60 to 50s, so that they can push out production from the U.S., basically cancel out production, meaning that there'll be certain wells once you get to 50-ish, give or take, that are no longer profitable to drill. And so by pulling back on the U.S., which is energy independent, a net exporter of energy, and by keeping prices low, that OPEC's making a calculated decision that they can actually keep control of the market much better versus all the flow from oil producers in the U.S. All right, lastly, natural gas having a big pop today. But again, look at this. Yeah, it's a good bounce, but it's basically getting back what it fell the last few days last week. And we're still in between resistance up here and technical support. So to be honest, there's nothing new here in terms of a trade on natural gas, but it certainly is keeping my attention with about an 8% move on nat gas today. That is a sizable move there. All right, guys. So listen, I talked about some swing trades today that I'm watching, day trading levels, not so much because we don't have a lot of major movers. But again, I do know things that we're watching. The traders are watching with me in the trading room. So we'll be in there in just a couple minutes. If you want to come check it out, remember we have 1-day passes as well as week passes if you just want to test it out for a day in the Apex Live day trading room. But listen, I think this week could be very intriguing. We're going to see, do we break through on the S&P this zone, or if not, if we don't break through by the end of the week, I would wonder if we're actually going to break through at all. So I think this week in particular, with the jobs report this week, is pivotal to this market overall. And my guess is, by the way, is that I think the jobs data comes in weaker than expected this month. For the first time, I think the non-farm payrolls shows some significant weakness and maybe even an uptick on unemployment. All right, you guys have a good one. I got to get to the trading room. Thanks so much for tuning in. I much appreciate it. I will talk to you guys soon. Take care.